Hey, what's up? Welcome to DGenEd. That's degenerative education, meaning none of this is financial advice. Just me having fun looking over charts like the chart behind me, which is of United States Antimony Corporation, ticker symbol UAMY or UAMY. And so, I'm pretty excited to be going over this chart, going over some options data, because I think that we could be seeing some pretty exciting moves with this in the near future. And yes, it's just kind of wanted to take you guys down the rabbit hole. And so just to start looking at the chart, what we can see is the 50-day simple moving average here in blue, and the stock has more or less been following that. However, more recently, it did have a pretty big move to the upside. And so that is where I have that Fibonacci retracement drawn from, effectively the lows over here up to the high, and it does look like it's pulled back to around the 618, right around $11.28, currently trading as I record this on Thursday, October 23rd during market hours, right around $12.16. And I actually think $12.50 is a really interesting price for this stock. So I did want to get into that. But yeah, I mean, has this pulled back and this has gotten into the discount zone before going higher? Or is it perhaps going to collapse? And so just looking at the chart, one thing that I did want to point out is just like the measurement of the move from the bottom here up to the top, up more than 200%. So a very nice move. And then from the bottom to, where it's at now, that's up around 100%. So a discount relative to the highs, but still, still very elevated in price relative to the lows, and also relative to that moving average, which is right around $7.28. So if we do, just out of curiosity, take a measurement from that level up to current price, that's going up from that moving average by about 64%. Or if we do take it down from current price to that moving average, that represents about a 40% drop to the downside. So, just some good things to be considering with that. But really what I wanted to dive into with this stock is not necessarily the chart here, but actually getting into some options data and kind of a thesis that was proposed on X a few days ago. And, I noticed it yesterday, so wanted to follow up on that with you guys. But just getting a better understanding of the company, U.S. Antimony Corporation. I just Google searched United States Antimony, and what we can see here is United States Antimony Corporation is an American rare earth metals company. So, I think that's something that's important to consider based on this post on X that we are going to discuss now, which is from the Bronx Viking. If you guys don't follow him, I think he's a great person to follow, whether you're interested in technical analysis or understanding options, unusual activity, unusual whales. He's a great person to follow. And then also right there is unusual whales. And so what Bronx posted, this was on October 21st, so on Tuesday of this week, he posted that UAMY, tell me you are the next company the government is taking a stake in without telling me you're the next company the U.S. government is taking a stake in. And so he is proposing that this is like the, LAC or Lithium Americas 2.0 flow in the data here. If you're not familiar, LAC, or Lithium Americas, is a lithium mining company in the U.S. I believe it's in the U.S., I think in Nevada. And the U.S. just purchased a stake in them. I was a little bit late to that. I've talked about it possibly in streams, or definitely in streams, possibly in videos. And then I've also done some videos on USAR, which is USA Rare Earth. And that is a rare earth mining company that has been in talks with the U.S. It's possible the U.S. owns a stake in them. It's possible they don't. I'm not really sure. But USAR, I've done a recent video on it, and, it's really taken off. Didn't participate, but it's really gone up. Same with LAC. And so UAMY really kind of fits that narrative of, either being in talks with the US government or, that the US government would buy a stake in the company to secure our, access to rare earth elements. And so I find that to be very interesting. And then looking at this flow that Bronx is posting here, what we can see is this is data from October 21st over here. And not to promote this contract or anything, just to try to use this as data to understand what the stock is going to be doing. We can see this contract is the $12.50 call that expires on February 20th of next year. So it's about 120 days between now and expiration. And so what Bronx points out here is that you have this very big green candle. It's an unusual candle, an unusual whale activity. And what you see here is this candle premium is about $3.3 million. And that's, way higher than any of the premium that we've seen in the past. So that does stand out as being pretty unusual. And what you can see over here is the net call and put premium. You see net put premium in red, that's more or less flat. You see green, I believe, I don't use this color scheme, but green would then be a net call premium. And that's, been more or less flat, but you've seen some dips here, some rips, some dips again, and now it seems like it's starting to go up. And I should note the y-axis over here, this is about $2 million going across. So that peak in net call premium was around $2 million. The dip down here, that would correspond with probably about a decrease of around $3 million or so. So that would be kind of a bearish signal, but what we're seeing here, that would be bullish. And, bearish, what you see in the blue, that is the stock price. So you see that go up. As it's going up, you see net call premium increase. That makes sense. At the top, you see net call premium decrease. People taking profits there, so that's not necessarily bearish. That's just, with the understanding that there's going to be a correction. Still up relative to the stock price over here. So that makes sense. This is, just understanding that when there is a big move to the upside, there's likely to be a pullback, take some profits. And now it looks like we're starting to see, that premium go up again, that bulls are starting to get active betting that this is going to be going higher. And that's again at $3.3 million. So very interesting there. And then so from this post that he put out again on October 21st, I saw this when I was at work yesterday. I'll get to my reply in a second down there. But so this was from the 22nd. I saw it last night when I was at work, and Bronx posted, and you don't think the government is taking a stake in UAMY. And then there's SpongeBob just looking like a know-it-all there. And so I responded to that. I'm at work. And excuse me, I was at work, and I looked at the data here, data for that contract. You can see right here, this is the February 20th expiration for next year of the $12.50 call. So you see that big spike in premium that he had pointed out, and you see the stock price in yellow. Or actually, sorry, that's not the stock price, that is the premium. The average fill for this contract was very high, up around, it looks like $8 per contract, so that would be $800 per contract, very, very high. And then you see that premium come down to around $4. And as that premium comes down, then we see a massive buy, that $3.3 million order when it's around $4. And so that stood out to me. And then I kind of drew parallels to, let's say this average fill is, a foxy lady walking by Garth. And then you see Garth, just do his little swing there, seeing that foxy lady go by, and that is that net call, or not net call premium, that is the premium for this contract, spiking up $3.3 million. So, it's like a foxy lady just walked past that contract. And, I got one like, and that was actually from Bronx, so I feel pretty good about that. So, yeah, I find that to be pretty interesting, that the stock could be going higher. But before we go back over to the chart, let's look at that contract here, looking at the data from Unusual Whales. We can see that this is the $12.50 call that expires in February on the 20th, 120 days between now and expiration. And this is just showing the data from the past 3 days. And we can see that big spike, candle premium $3.3 million. And we have seen the premium for this contract go up. At that time, the average fill for those orders was $3.67. So with each contract representing 100 shares, that's $3.67 times 100, or $367 per contract. And we can see in yellow that net call premium, that's over here. The premium for that contract has gone up. And, went to a high yesterday on the 22nd to a high of, let's see, average fill $4.79. That'd be about $479 per contract. It has since pulled back today as I am recording this on the 23rd during market hours, and we can see that the last average fill was around $3.92, or $392 per one of those contracts. Oh, and I forgot to mention this from my post over here. I can pull it up in Unusual Whales. The reason why I sent the screenshot like this is because I wanted to include the change in open interest down here. So on the 21st, you can barely see it, but there was a volume of around 12.4 thousand contracts when open interest was around 2.2 thousand contracts open. And then we saw an increase in open interest of about 10.7 thousand contracts, going from around 2.2 thousand open interest to around 12.9 thousand contracts open. So that is suggesting that there are some bullish bets on this. So anyways, had to point that out just so you understand why I posted the screenshot with this frame in this data down here. And then looking over at the data table here, we can zoom in on this so you guys can view it a little better, although I might make Ed step out of the way for this. And let's just, sorry, 1 second. And so let's scroll down and we can see the data here. So a little bit bigger. So, on the 21st, opening the day, we had 2.2 thousand contracts open. And then we saw this volume, massive volume for this one specific contract. As you can see up here, it's for this specific contract. Saw a volume of 13.451 thousand contracts traded that day, which led to an increase in open interest of 10.788 thousand contracts, going from 2.2 to nearly 13,000 contracts open. So pretty massive. And I should also note that on the 21st, the total premium traded was about $5 million. But based on that one candle, sorry for moving around so much, from this one candle, that's a candle premium of 3.3 million. If we lump all of that together, that call premium for the day back then on the 21st, back then, 3 days ago, 2 days ago, we can see that, was $5 million. So that's a lot of money. At least 3.3 million seems to have been going along this. And we can actually, do a little bit of math on this. So from that day, from the 21st, we can look at the average fill, 3.76, or actually better yet, maybe we could just go up here to see what the average fill was for this candle. That was 3.67. So if we take 3.67, actually, I'm not going to do that because that would be specific to that candle. Let's just consider the entire day. And so we'll do that by scrolling down here to look at the average fill for that day. I'm just going to pull up the handy dandy calculator here and type in that $3.76 is the average fill for contracts for that day. And then let's see, multiplying that by $100 per contract, we get, $376. But then, not considering the volume over here, because then that's going to kind of be represented of this premium here. Some of that's going long, some of that's going short, some of it's in and out of the market. It's not all betting on UAMY going up. So if we just take the average fill from there and then take the increase in open interest into the following day, so that's about, like I said, around 11,000. But let's take that exact same number, so 376 times 10,788, and we can see that, it's not 3.3 million, it's not 5 million, about $4 million went long into this company. Betting, a safe bet at the time. Let's see, where was the stock price? I'm actually going to zoom out so it's not so cluttered over here. Let's get that back to 100%. So let's see, where was the stock price a few days ago? And I might actually just go back to the chart. So on the 21st, that would be this red candle here, stock price opened on that day at 12.50, so that's at the money for that contract, 12.50 strike, but it closed at 12.39. So that's an out of the money contract, but it's not, crazy because the high on that day was 12.64. That was in the money. And, yesterday on the 22nd, the stock price went up to a high of 13.71. So definitely in the money with that strike of 12.50. And so, thinking about that, where the price is, around 12.24 right now, we can actually look at that, over here, 12.25 with the daily candles. I like to look at the daily. I don't do things too quickly, so the daily works fine for me. And so, yeah, I think that the stock price could be going a lot higher. And one way that we could get an idea of where the stock price could be going to is by doing a Fibonacci extension. So not doing it from the exact bottoms here, but just from like the approximate bottoms where we had multiple wicks going below, multiple, entry points, multiple days to be able to get in at this price. And then let's go up to the high here, or I should say the open on October 14th, which is around 1950. Looks like I've got that drawn to around 1945, but it doesn't really matter. It's just approximate, just to get an idea. And then I pull this back down to let's see, the open on October 17th, which was at a price of right around 11 bucks. But I'm just going to extend this forward into the future a little bit so we can get an idea of that. And so if we do take a step back in the chart, we can see that the 786 is right around $21 to $22. So it's actually 786 is around 21.38 right there. But then if we look at the 100%, which if you're curious how you get that, that's just based on, a measurement from the bottom here up to the top, and then take that forward based on the lows over here. And then I might actually just extend this a few days into the future. So let's say 310, and let's just see where that takes us. That intersects with that line perfectly. So that 100% extension is just this exact same distance, but taken from the lows over here. And that will be at a price of around $24. So if price is currently around 12.23 or 12 to 12.50, maybe 12 to 13, I think that there's a pretty nice swing here, whether it's buy-in shares or contracts, you do you. But even just shares, price going from around 12 bucks to around 24 bucks, that's a 2x. And if it takes the same amount of time that it took over here, that would basically be the distance that this line extends forward into the future. And so that would be by, November 4th, the 4th of November, which would be a Tuesday, we could be seeing price around $24. Maybe it goes up a little quicker, maybe it goes up a little bit slower, and maybe it goes a little bit higher. And if it does go higher, we can see the 1618 extension, that's going to be around $32 or maybe $30. Would be a psychological level of resistance. That would kind of make some sense. Three $10 bills or 120 and a 10. We like to think in dollar bills. Or maybe we go even higher. Crazy, I know. But if you look at the chart of USAR, maybe you'd see it. And actually, we can look at that in just a second. But the 2618, that would be at a price of around $45. So let's just take some measurements. From current price, if it were to go up to the 786, that would represent about a 78% swing to the upside. If it goes up to the 100%, that would represent about a 100% move, or a 2x. To the 1618, 168% there, 169, 170%, right around there. Maybe it just goes up to 30 though, like I was talking about, and that would be about 150% swing to the upside, so still very nice there. But if it goes to the 2618, that would be around a 250 to 70 or 80% move to the upside, so very nice there. And while that might seem crazy, let's think about this. Over 200%, where have we seen that before? And so, I talked about this at the beginning of the video. From here to here, that was about 230% move to the upside. So I do think it's feasible that we could be seeing this going up to, $24 to $45 a share between now and the end of November, let's say. Who knows? And to kind of illustrate that, let's look at this chart of USAR. I've talked about it before. I will include a link to the video in the description down below. But yeah, so I did some analysis over here, and I actually did this analysis. Let's see, I'm just trying to fit this. Yeah, it's crazy. I did this analysis over here when it was breaking out, and we did find some resistance here, and then I continued that analysis to suggest that price could be going up to around $24, $25 based on the 1618, or that 100% move at $21.33 there. But where did it actually go? Let's just add some more levels to this. So let's add, I'm going to do the 2618 here, and then, sorry, we can see the 2618. I need to adjust these levels a little bit. Sorry about that. But the 2618 is around $30, $31. The 3618, where it was at before, that was around $36.44. But price even went higher than that. And so if we go to the next level, that would be around the 4236. And that's at a price of around $40. And we actually hit a high of 45. Let's see. Let's just minimize that for a second, and we can see the high on October 13th was $43.98. So from this breakout, it didn't just go up to the 100% move there. It went up from this breakout, so not even at the bottom. It went up 120% to the highs there. And so I do think that we could be seeing something very similar with UAMY over here, like we just talked about. So yeah, whether it's options or whether it's just shares, I think that this could be a real moneymaker in the next month or so. And so I just wanted to share that with you guys. And again, big shout out to the Bronx Viking for posting this. I would encourage you follow him on X. You can also follow me if you'd like. And and this is again that contract, the $12.50 strike call that expires in February, 120 days from now. Could be going to zero. Contracts are very risky, so do consider that. But if it does not go to zero, it could be a big moneymaker. And if it does go to zero, stock is a little bit safer bet with still, upside potential of, 2x to maybe 3x or so. But yeah, very cool. Just wanted to share that with you guys. And as always, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more videos like this. Thanks a lot, and I'll see you in the next one. Bye, guys.